start with an international producer first, just to set the scene, just to give you a sense of how we're doing globally. And we've chosen Tyson Foods here. So it's not a stock we've talked about on Hot Stocks before, but it is the largest US protein producer. And by protein, of course, we're talking about principally beef, pork, and chicken, which is, in the US context, of course, partly a story of food supply into the restaurant industry, like the KFCs and the McDonald's of the world, but it's also the manufacturing of prepared foods, because when you go to supermarkets in the US, you can find any number of different prepared foods which are ready to eat as well as ready to cook at home, and it's across the board, of course. Turkey is in there as well, lunch meat, which I think is like polony, spam, hot dogs, pizza crusts, tortillas, and even desserts, apparently, that Tyson Foods produces. Market capitalization of Tyson Foods is $26 billion. So it's not tremendously enormous, but it's definitely bigger than anything we've got going on down here. Price to earnings ratio 18.6, dividend yield 0.87. But this is a company that's done very well recently and has benefited from this trend globally away from carbohydrate-based foods and people wanting to eat more protein, which is this Banting thing, right?
Yeah, so, and also, I mean, the market capitalization might not be that big, but they're doing sales of upwards of $9 billion per quarter.
Yeah.
They've got a presence in 130 different countries that they sell their products. This is a big company. I think they're also the first company to have landed chicken from the US in South Africa. After we've managed to lift the anti-dumping laws and we're allowing chicken in. So the quota there is 65,000 tons of chicken from the US per annum. And they feel, for one, that the quota will be met by the end of year one.
Because there's this AGOA thing, right? That was one of the deals we did as a country, was to allow US chicken in, and it's because the US produces a lot of chicken and then they mostly take the white meat and then they sell
they dump the rest,
thighs and legs.
The thighs and legs and drumsticks.
Let's have a look at what Tyson Foods chart looks like, because I can tell you this one is looking very good. So it really gets a lift from that 2013-2014 shift globally towards greater protein consumption, and apparently it's a discernible trend. So breakfast cereal sales in America looking bad.
Well, that's
and
good,
all
I think,
the
because of the
carbohydrate
sugar
breakfast
is terrible for people in any case.
Yeah, so it's kind of like, you think it's only Tim Noakes and it's this country, but it's not. It's a global thing that's going on and people are consuming more of that sort of stuff. Yeah.
Correct.
Let's talk about Tyson, though, as an investment opportunity, because it started in the 1930s by the granddad of the guy who's currently the chairman of the board. It's one of those companies that has like a pyramid control structure. The Tyson family actually still control it. It doesn't have a particularly good dividend yield, but it's obviously doing well now, selling lots of foods and selling lots of prepared foods and selling lots to its, retail fast food type consumers.
Look, and it's also food producers is one of those defensive things. In bad times, and if we look at the current state of the economic backdrop of the world, things are fairly uncertain with regards to what's going to happen in the US with the US interest rates and all these big scary things happening, Brexit and so on. So where do you invest your money? You put it with something that's safe. So you're looking for things that people are going to continue needing. At this point, I think those are probably resources, pharmaceuticals, and food. So food production is probably a better space to park your money while you're unsure where the big
There's one thing, though, that just does worry me at a sort of intuitive level about this company, is that they are quite a popular company to hate. In other words, every now and then you get an undercover journalist who poses as a worker at a Tyson Foods plant
and publishes all sorts of things that they're doing wrong,
showing that the chickens are not having a fair shake.
Well, they're being slaughtered, I mean, that's not really,
because there's this whole thing about it's all very well to eat animals, but you have to do it in a humane way. And unfortunately, in the food production cycle, it's quite hard for these companies to maintain very, very high ethical standards, because you've got workers there who may, sort of be abusive.
Yeah, I've seen some of those videos coming out as well. In the,
don't worry about that.
Things are falling off. But what worries me really is
that a reason not to own the shares, or should one just be like a heartless investor and move on?
To tell you the truth, yes, you should be a heartless investor and move on. But for me, what worries me is it's got a very high PE and it's got very low dividend yield. So it's not offering
Yeah,
value.
I'm not sure why the yield is low, because often family companies, the yield is high. But I guess what's happened here is that the dividends were probably quite conservatively maintained, and then the share price has gone up recently on this burgeoning sales. So you say it's expensive. So you reckon an 18.5 PE is, I suppose it is.
It is relatively expensive compared to the things that we can get locally.
Yeah.
We've got some really attractive dividend yields and PEs here. So I'd rather stick.
Anyway, we've got to get to the local ones. So what about this one, hot or not?
I would say not, simply because it is outside of South Africa, and it's maybe a little big for me to understand.
Okay, I'm going to go with hot, because I think as it goes, the US market, these are quite attractive companies, quite well positioned, and certainly doing well at the moment anyway with this shift towards more protein-based diets. Okay, good.